but the Bitcoin made us happy by as much as 223%, which is a safe bet. The Ethereum 2.0 test network doesn't fail again, then this fall we will finally get a zero-phase start. The cryptocurrency exchange has officially become a bank and can now open deposits. Welcome to the Coin Post. Tether's capitalization hit $15 billion. Ethereum transaction fee went up to $30, and cryptocurrency exchanges have now officially become banks. As you can see, I had no choice but to prepare another episode of the latest cryptocurrency news. Subscribe to the channel please and join the best community on YouTube. Let's start. I wonder if anyone would write in the comments that the introduction was too short. Anyway, at the time I was making the video, Bitcoin couldn't make it to 11k, even though it seemed like it was gonna work out. We never got to the main resistance level in the range from 11,200 to 11,400, but don't make a big deal out of it. The previous increase of up to 10,800 was very decent, and if we fix that price, the chart will look quite bull. The main thing is, and it's my personal opinion, it's not to drop to the 10,000 again, because then there will be those who will draw such a head and shoulders on the weekly chart. But don't judge me, drawing was never my strong suit. With that, I suggest we end discussing the rates and talk about the best time to buy. Writer, business coach, and recently cryptocurrency advocate Robert Kiyosaki said, I quote, "The real problem is not the pandemic. The real problem is the huge national debt of the US. The country is bankrupt." And since any crisis is a time of opportunity, Robert believes that when the stock market collapses again, it will drag gold, silver, and Bitcoin with it. This could happen when an effective vaccine is on the market. And this will be the best time to buy because the assets Robert named will show massive growth in the future. The vaccine is being developed by many now, so all of us will soon have an opportunity to test this prediction. And let's give you some figures. So, the S&P 500 index after the March crash at the peak showed a 64% return. Gold rose by $628 in the same period and gave its owners a plus 43%, which doesn't precisely fit Kiyosaki's theory. But the Bitcoin made us happy by as much as 223%, which is a safe bet. I'm looking forward to your comments on what kind of asset you're gonna go for if the second wave of collapse comes. I specifically said if because, despite many arguments in its favor, there's no guarantee, which should also be taken into account. And now, let's move on to the next topic. Just recently, I've been telling you that apps are leaving Ethereum blockchain because of a $14 enormous transaction fee. And on September 17th, the Ethereum commission fee soared up to $30 per transfer. I mean, seriously? 30? Whereas Bitcoin's $3 fee is considered huge. Well, it was the Uniswap exchange that got Ethereum acting crazy, as it decided to release its own Uni token and distribute it to users. People get rich out of the blue because Uni got listed on the Binance, and at one point it was trading at $350, and while making the video it was $250. Given that they were giving out 400 tokens per hand, you can calculate how fortunate got the lucky ones. But if you need to do some Ethereum transactions, consider that at best the network overload will end within a few hours, at worst a few days. And the best piece of news about Ethereum is that GitHub posted an official offer to convert the blockchain to the proof-of-stake algorithm. Now, it has to be approved by the leading Ethereum developers, and if everything works out and the Ethereum 2.0 test network doesn't fail again, then this fall we will finally get a zero-phase start. So stay positive and support this video with a thumbs up. Next, we're talking about how the crypto exchange became a bank, and how the stablecoins are gonna be regulated at the state level. I've already brought this up several times, and I've told you that cryptocurrencies, or Bitcoin to be precise, were initially designed as a means of freedom from banks, so that everyone owns and uses their own money without having to get the bank's approval for each transaction. But everybody loves money, and out of that love, we got cryptocurrency exchanges, and within the industry, they act like banks. Let's take the new debit card from Binance, which has just appeared in the Eurozone. The conditions are quite fascinating. You can top up the card in Bitcoin and BNB, pay with it like a regular credit card, and get cash back in BNB. It's all pretty convenient, but keep in mind that a payment is made from the exchange account and through the payment network. That means the exchange or the payment provider can cancel your transaction at any time. And moreover, the exchange can even block your wallet. And it could take ages to take out the cryptocurrency. It's like a real bank. And here's another piece of news. The state of Wyoming has approved Kraken US-based cryptocurrency exchange application to form the world's first special purpose depository institution, SPDI. In this way, the cryptocurrency exchange has officially become a bank and can now open deposits, keep your funds, and entrust them too. And since the US made it easier to license crypto companies, you need just a single state to operate across the whole country, so they may well become the first official US crypto bank. The exchange has already announced it's gonna issue its own debit card and open interest and pension accounts very soon. So in the long run, it wants to go global. And as good as it is that the industry is developing, cryptocurrencies were not originally created to make crypto banks. And I want to remind you that not your private keys, not your bitcoins. And I'm moving on to the final topic. And you subscribe to our YouTube channel, please, because whether you trust the exchanges or not, you'll find a lot of fascinating stuff here. The capitalization of Tether's stablecoin exceeded $15 billion, and it still didn't help Bitcoin fix the price above 11K, which I mentioned at the beginning. And there was a whole conspiracy theory that because the court decided to give the New York State's Attorney's Office access to all Bitfinex stock cases, and at the same time dig around Tether's files, there was a rumor going that the Bitcoin price was growing because of the panic USDT sale. However, even such sentiments were not enough. But Tether's problems in the US are nothing compared to what they could soon accept in the EU. The ministers of finance of Germany, France, Italy, Spain, and the Netherlands proposed the following rules for the stablecoin issuers. The 5 countries want all stablecoins to be pledged at a ratio of 1:1 with fiat currency, which Tether no longer does, with reserve assets denominated in the euro or other currencies of EU member states and deposited in an EU-approved institution. And then we get the news that an early draft version of dealing with crypto assets was leaked. It equated cryptocurrencies with traditional financial instruments. Under these rules, all token issuers must be under the regulator's control, and service providers such as wallets and exchanges must be licensed. Stablecoins will be most closely monitored, and it can only be launched after a special commission examines their white paper. To sum up, the good news is that cryptocurrencies are making a step closer to global recognition as a financial instrument every day. And the bad news is that we're gonna have to get used to the new rules for the issue and use. Are you ready for this future of cryptocurrency? Write it in the comments and share this video with your friends to keep them posted. And that's it for today. Thanks for watching. It's the Coin Post channel. Subscribe and get enlightened.